Yo, what's up, HRJ? Much love, brother. How you been? What's up, Andy? What's up, Feger? Bar, my day was fantastic. How was your day, brother? What's up, Henderson? What's up, Bearded? Barb, good evening, bro. Jilly, I see you fixed your, you're showing up now. What's up, JB? What's up, Stephen Farmer? Jose, what's going on? Midas, welcome to the stream, bro. Hey, enjoy your stay with your family, bro. Hell yeah. That's what it's all about. What's up, Gear? How's it going? Yeah, let me grab that for you. There you go, brother. So today was pretty choppy and boring, eh? I'd say. What up, Ricky Spanish? How you doing, brother? In Triri. Did I get it right today? Is that right? Shout out to whoever put the timestamps on that video. That's the real gangster. Yeah, let me take a peek, man. So there's a little bit of discretion with that. If it engulfs the whole body, that's generally okay. But if it gets like tested with another candle down within that wick, it's not as clear. If it engulfs the whole candle, it's really clear. You can trust those. But yeah, sometimes you'll engulf the wick. Like this right here, I would still consider an order block even though it didn't engulf the entire wick. And then when the price came back down there, right, it bounced out of it. So I would still consider this cement. When it gets like a little splitting hairs is like if this wick had come all the way down here and then went, you might consider that mitigated. But yeah, generally if it looks like this, even though it doesn't engulf the whole wick, I would consider that an order block. Okay, cool, time's up. A lot of people are probably watching Alex right now, so we'll give the sauce for you guys. So right now, what do we know? We know, sorry, this music's really loud for me. I need to turn down for you guys as well. Okay. So we know that the 1 hour is bullish, right? Which is why we had our first take profit on the short at the golden pocket here. So we went short last night off the 30-minute break here. Got short here. Continued down, hit TP1, SFP. This was, looking back, this was probably a clue that we were going to come swipe this high, right? So you have a really high volume candle, like you see the volume here. You have really high volume 30-minute candle. SFP is the strong low, or the weak low, and then you come back and SFP it again on another 30-minute candle. This is strength here. This was probably the clue to take some more profit on that short. But we come back up, we stop us out, we fake out to the downside off the SFP here, and now we're coming up trying to break this 30-minute structure, which would be cool. So if we do break the 30-minute structure bullish, that would be nice because your 1 hour is bullish, right? So if you break your 30-minute back bullish, then you can expect maybe an attack of this 1 hour weak high, right? This would be your target. If you're in a long, this should be your target, the weak high on the 1 hour. Now, kind of something that I was talking about in the weekly open update is whether or not this is going to be like a daily golden bull run, or whether or not we're going to come up, or sorry, a 4 hour golden bull run, or whether we're going to come up towards this like 98,000 zone. So if we do break through the golden pocket here, it should be a pretty quick move up to 90,000. But if we look left over here, we don't really have much resistance in this area, right? So you dump down and you dump right through it. You pump up, you pump right through it. You dump down, you dump right through it. You pump up, you pump right through it. You dump down, you dump right through it. So pretty much every time we've come through this area, right, it's been a quick move. Like we haven't really had much volume in that area. So where do we see real volume in the chart? So the volume in the chart looks around here, right? So we'd kind of be looking at this supply area as our next little area of confluence if we do push through the golden pocket. Yes, we could reject from the 786, right? So again, if we get 30-minute structure at the 786, we'll be looking to take the same short, right? And the risk reward will be even better because we still have a 4 hour weak low below us, right? So if we come up and we set some 30-minute structure up here, if we pump up and we get bearish here, right, then your target's the same, stop below whatever the 30-minute high is, and you're targeting the lows. That would be a really nice trade, right? Now the dream would be if we come up here, let's say we pump through this, right, and we get 1 hour structure up here. If we get bearish 1 hour structure up here, why do we like that? Because that's the 1 hour, right? If we put our 3 time frames up here, right, the 4 hour is bearish, the daily is bearish, that would be the 1 hour flipping bearish to match all of your higher time frames. And that would be a crazy risk to reward down to this 4 hour week low. So at this point, that's kind of the trade that I'm looking for. What would change my mind? To change my mind, you would have to break 4 hour structure, which is still sitting up here at like 93,000. If you break 93,000, this is just liquidity all through here, right? This is just liquidity all through here, so it should be a pretty quick move up to the golden pocket on the daily, and that'll be the real test. If like we're just going to come up here, set some 4 hour structure to flip back. Obviously, it's 4 hour structure to be a little bit bigger, right? But maybe we set 4 hour structure to flip back bearish. We do something here, right? Something like that, right? This would be pretty bad for the market because you'd be targeting the daily week low down here, and altcoins would probably get absolutely hammered. So again, when we get to these key decision areas, if you haven't already sold up here, right, after the weekly break, these are areas where if you start to get 4 hour breaks, like where's the weekly one again? Hold on. Yeah, like 110. Yeah, like if we come back into these areas and we get like 4 hour breaks, you have to kind of start asking yourself, is this something that I want to hold through the whole bear market, right? And maybe for you, maybe that just means selling your altcoins back to Bitcoin, right? Something that maybe you feel a little more comfortable holding through the bear market because you're sure it's going to come back. Altcoins do usually dump like 90 to 99% during the bear market, so you don't necessarily want to be holding a big portfolio of those during the bear market. But let's talk locally. So we've talked about kind of these higher areas. Make sure you have some alerts on your chart for like this supply. Let's set that here now. Wait, what did I messed up my stuff. Hold on. Okay. Wow, I have a lot of alerts. Okay. So make sure you're aware of these areas above us. All right, so we just SFP'd the 15-minute. $30-minute, we SFP'd as well. Five risk to reward. That's not bad. That's not bad. About 2 minute. It's not 2 minute. It's just 1 minute structure off an SFP, but that could play. So really the question right now is this chop at the top, right, to come back down and grab that liquidity from this liquidity curve? Totally possible. In which case, it would kind of suck that we got stopped out of the short. But if that's the case, it'll become apparent in the morning, and there will be other shorts, right? Maybe we come up and SFP this, or maybe we come break 1 hour structure down here. But really, at this point, we're waiting for 1 hour structure to align with 4 hour structure. So where's our 1 hour low now? Our 1 hour low is down here. So if we do come close below this on the 1 hour, we should be expecting a roll down. Otherwise, like I said on the stream yesterday, we had our 1 hour change of character and then our 1 hour break of structure. So we are in a 1 hour uptrend with a weak high up here. We also have our 200 EMA here, which we haven't quite tested yet. So it'll be interesting to see what we do there. Man, today it was just sideways consolidation, pretty gross price action. What do our indicators look like here? 15 and 30 minute SFP. Yeah. Can we go over 2 candle rule? Yeah, we can go over that in a little bit. What's up, 32? Good to see you. Oh, that's true, Barb. Maybe I can start setting up milers that way. But yeah, most of the TA from yesterday still plays because we really haven't done much except come test the golden pocket, put in some SFPs, and try to push back up. It is interesting that we didn't get an aggressive sell-off here. A lot of that's probably due to the fact that the S&P is absolutely ripping. So let's take a look at kind of the macro here on the SFP, or the SPX, S&P. There we go. So the S&P had a 4-hour break of structure, which is nice. Likely coming up to this resistance of 68.30. We'll see. If we get up here, it's definitely, you definitely want to pay attention to see if we get some bear breaks up here. But we were talking about how, okay, so there's no bear break on this. What about the ES? Hold on. That's why we're getting a bit of a pump. So we were talking about this level on futures here. So you would have got a daily break of structure if you close below 65.42. What do? We SFP that on the daily, and then we just pump like crazy out of it, which is interesting. What about the NASDAQ here? Okay, so the NASDAQ actually broke bearishly here. Bounced off supply. Where's that golden pocket? Okay, so this would be kind of the equivalent of the S&P going to that trend line. What are we looking like? Ooh, that's a little scary. It's a little scary on the NASDAQ. NASDAQ hasn't broken 4-hour structure yet. It's got to come a little higher. So S&P's a little bit ahead. But yeah, that part of the reason why Bitcoin's probably hanging on is because this stock market trend is still ripping. Yeah. We're still chilling on the NASDAQ here. Let's check some of the other charts here. So total's trying to break out this downtrend, which is nice. Break 1-hour structure. Break it here. SFP. This looks very similar to Bitcoin. I like the breakout here. What do indicators look like on this? We're trying to get a MACD cross on total. There could be something here, but again, we got to break through this golden pocket. It's really a war at the golden pocket right now. Yeah, not really much new structure to talk about from yesterday besides the 1-hour golden pocket retest and then this shenanigans from earlier in the day. Yeah, that was my dryer. All right, guys, do you have any questions about Bitcoin or anything from the day or just trading in general? Or any questions about the trade? We have a 15-minute and a 30-minute SFP, how to get in. So yeah, I was looking at that for a possibility of a trade setup, but I don't, like, the only trade setup that you really have here is like a 1-minute break, which with a 1-hour uptrend, I don't necessarily want a shorter 1-minute break, but I'll tell you this. What I do see here is, let's see, do we have any supply up here? We already rejected off that. If we get like, it'd be hard to do that without breaking 30-minute structure, but if we get something like this, then you could see a short back down. If we get like a 5-minute break, but right now I would say that it's no trade. I don't trust a 1-minute break. It could play, but I don't like taking a 1-minute bear break in a 1-hour uptrend. Oh, my day was great, Rich. How was yours? Yeah, okay. So Gear, basically, and I go over this extensively in the free course video, but basically, so for something to be a valid high or a valid low, it has to have 2 consecutive candles in the same direction. So like, for example, 2 green candles pushing up would be a high, and it has to be consecutive, right? Or 2 red candles pushing down would be a low. But you'll often get situations like right here, right? So if you get like green candle, red candle, green candle, that's not going to be a market structure high, right? So for example, here, right, you have to understand where the high is, right? Because this takes the low, but it doesn't set a high. So if you pull your golden pocket from here, right, we push right through it, right? But if you understand where the high is, you pull your golden pocket from there, that's where you get your real rejection, right? And also understanding market structure breaks, you have to take this into consideration. But basically, that's pretty much it in a nutshell, right? So if we look at like the 4-hour back, like right here, right, this would not be a valid high, but like this would, because you start with 2 consecutive candles. Now the highest point in the high doesn't have to be like from the green candles, just at some point in making that high or in making that low, you have to have 2 consecutive candles in the same direction. This comes into play a lot with like finding bottoming structure. Like a lot of times you can front run it, or you can like a lot of times, just let me point out, like it's gonna take the low and then take the high, kind of like what we were just looking at on the 5-minute. Like ETH was a good example of this earlier today, or I think it was Sol. Yeah, so like knowing that you're putting in a high here, right? Whenever you come put in this low, you're already preparing for the break of that high for like a bullish trade, right? Whereas if it's like something like this, right, where it's 1 green candle, even though you made a low and you broke that high, you wouldn't consider this a market structure break. And if you take it like market structure break, you get absolutely rubbed, right? So understanding where the high is, right? So you break structure here, you put in a high, you don't take the low, so this is not a high, right? You come back in, you come back up to test supply, and then you sell off, right? But if you aren't following those market structure rules, this looks like a break, and you take that, and you just get wrecked. So it's just understanding what qualifies as a valid low or valid high. Does that make sense, Gear? If you have any more specific questions, I might be able to better answer that. The ETH buying entry. Yeah, let's take a look at ETH. Why am I including a low that isn't a low? Okay, so let's go. Are you talking about on the daily over here? Okay, so yeah, so that's a great question. So, where was I? I was here, right? So, this is a low, right? Because at some point, so this was your high, right? This was your low. At some point in taking out this low, right? At some point in coming down, you have 2 consecutive red candles, right? You have 2 red candles here, 2 red candles here, 2 red candles here. So it qualifies as a low multiple times. The 2 red candles don't have to be at the low themselves. It has to be at some point in the down move you had at least 2 consecutive candles pushing in the same direction. And you have to apply this like within the structure rules themselves, right? So you still have to understand like internal versus external structure, and like understanding that you wouldn't really be looking like these 2 candles right here. Yes, you had 2 candles that pushed in the same direction here, but it's internal between what your low and your high was. So this is not a daily high. It's also, I mean, you could, yeah, it's also internal to even the internal structure here. So yeah, you wouldn't consider this a valid high, if that makes sense. Okay, awesome, Gear. Yeah, if you have any other questions, you can ask them now, or my DMs are always open as well. I watched your 3-minute money flow video with bullish structure on the 1 hour from 3 years ago. Do you still use that? Do you still use bear market conditions as well? So the 3-minute money flow strategy definitely works. It's like a market cipher strategy. To be honest with you, I don't really use Market Cipher that much anymore, but yeah, the strategy still works. So if you're in like a 1 hour uptrend and you get 3-minute anchor trigger, right, you generally get a good move, right? Like here, 3-minute anchor trigger, red money flow, you pump up, like a 1% move to resistance, and let's see. Here you get a 3-minute anchor trigger, right? And you pump up like 2%, right? Come back down, you get anchor, 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 trigger wave. So this one failed, but then you get 3-minute anchor trigger and you pump up again. So yeah, it still does work. I just don't, I'll use Market Cipher for like confluence at key levels, but I just don't really use it that much anymore. Where the lower low would go on something like what happened in the Binance liquidity event with coins like Sol, where the dip was massive but didn't close. Yeah, so we talked about this a lot after the liquidity event. So the liquidity event, pardon my language, fucked up a lot of charts, right? Like, and some of the charts are still fucked up from the liquidity event, right? So we can go like here. It'll make more sense. Yeah, so the problem is whenever you do this, right, and you have a giant wick like this, so if we mark like what our 4-hour external structure was at that point in time, so this was the high, and this was the low, and this was the low. So kind of like when you see me look at altcoins and tell you, hey, if it looks like this, don't touch it. Well, you can see why, right? Because all of this is internal on the 4-hour, right? And you have a weak low below you. What do you eventually do? You go take out the weak low, right? And the problem is this, at least for the way that I trade, this, what was this, like 2-week environment, or it's almost a month, Jesus. Yeah, this like month of consolidating sideways here, this, I did not take very many trades in this, right? We took like the 4-hour SFP on Bitcoin, but and that was just because we saw like the Coinbase chart. But this is all internal structure. Think of structure like a container, right? So this is the top of your container and this is the bottom of your container. Until you break one of those levels, none of this structure really matters to me in terms of determining trend. Basically, all that you know is that you have a weak low below you that's being targeted. So yeah, the wick is still the low, even though it didn't close down there, and it just creates like a giant container for structure. Now, eventually we broke the low, which, I mean, fixes the chart, right? Which we like. So now if we come up here and we get like a 4-hour break, then we have external structure. We got a fake out range deviation here on Sol. Come back down to wreck everyone, and then trying to come back up now. Just wanted to say that call yesterday with the short was fire. Thanks, man. Yeah, happy to give you guys a banger. I know a lot of you guys were in that trade. Throw a 1 in chat if you took that short yesterday. Will you expand on why you don't use Market Cipher much anymore? It's literally the backbone of my strategy. Yeah, bro. I just don't really use indicators anymore. Like, I'll leave some moving averages on, but I just don't really use indicators. Like, I just trade with this, just the charts. Like, once I really like dialed in on market structure and I look at charts, like they never look the same for me. Like, I don't really need an indicator to tell me if something's, you know, overextended or needs to correct or things like that. But I use Market Cipher forever. It's a great indicator. It's just I just kind of moved away from it mostly. One thing that I will use on Market Cipher that I show on stream all the time is I like the Stokes with the 20. So if you put like, let's go over to total here. I think we still have it. Yeah, so if you put like a line on 20 and a line on 80, let's hide drawings here. Or wait, we can't do that. Let's go to a different chart. So like, you can generally tell, like if the Stokes are above, if both Stokes are above 80, right? Like they both go above 80 here. Generally, the pump is going to continue until they both lose the 80 line, right? Like on total, they both lose the 80 line here. You know what? Let's go through that again, right? So let's mark all the times with the 80 and the 20 line here. So you lose the 80 line here. You lose the 80 line here. Let's see. You break the 20 line with both Stokes here or here. And you lose the 80 line here. You lose the 80 line. Well, you lose it here, but it closes down here. Yeah, we'll just mark here. Yeah, so and this translates to smaller time frames too. Like maybe we'll zoom in and show you guys. So I don't really have a video on this, but I should make a video on this. So if you look, one of the ways that we were able to call the top here on total was these Stokes losing the 80 line, right? And I showed this on stream a bunch of times, right? I showed this like every day for 2 weeks on stream. So whenever you lose the 80 line on the Stokes here, you generally get a correction, right? So lose the 80 line, get a correction. Lose the 80 line, get a correction. Lose the 80 line, get a correction, right? Break the 20 line, starts the run, right? Lose the 80 line, get a big correction. Lose the 80 line, get a correction, right? And we can even go back further, right? So where do we lose the 80 line here? Lose the 80 line, right? Big correction. Break the 20 line, big move up, right? So generally, and like whenever you're above the 80 line, it's kind of like a runaway train, right? It's generally the indication of a squeeze. If I put on log, it'll show a little better. So that's kind of how I, yeah, here, maybe if I do this on regular Market Cipher, it'll be easier for you guys to see. Okay. Okay, so let's turn off Market Cipher right here. Okay, so this is kind of probably what you guys are familiar with looking at. So if we just mark these here, use the 80 line. Or wait, that's, yeah, you can use Bitcoin too, right? Like you use the 80 line here, big correction, but I think total is a little more clear. Oh man, I have to do that again. Bear with me, guys. Apologies. Okay. Yeah, so you lose the 80 line here. Lose the 80 line here. Lose the 80 line here. And then here again. Oh, that's kind of even better, right? The first time you lose it. And then you break the 20 line with both here. And you lose the 80 line here. Lose the 80 line here. And you lose the 80 line here. And you break the 20 line with both here. Right, so you see, like, whenever you break the 20 line, you usually get a pretty big pump. And then whenever you lose the 80 line, you usually get a pretty big dump. And another thing is, like, you'll see the RSIs like hugging the top here sometimes. That is the indication of a short squeeze, and generally that will continue squeezing until you lose the 80 line, and then you get a correction. So there's a couple ways that you can play that. You can ride the short squeeze up, but just make sure you get out when you lose like the 80 line. If we look on the 15-minute, I'm sure we can find examples of this. Let's see. Yeah, so even like right here, right? Like you break above the 80 line, you're kind of hugging the top here, and you're squeezing, right? Oh, we're on total. But yeah, it's still going to work here on total, right? So then you lose the 80 line here, lose the 80 line here, and you sell off, right? You come under the 20 line here, you break the 20 line up here, and you get kind of a pump, right? So just, let's see, it's got to be... Yeah, so you break both above the 80 line here, you come up, you lose the 80 line here, and you kind of sell off, right? And find more examples here. Maybe we can find someone. Okay, so here's a good one on the 1 hour. Where was that? Yeah, so you break durably above the 80 line here, right? You squeeze up, right? You break down from the 80 line here, you get a little bit of a SFP, right? But then you lose it again here, and that marks kind of the top, and you sell off, right? So a lot of people don't really use the Stokes on Market Cipher, but I like it, and it works in the inverse direction as well, right? So you durably get below the 20 line here, and then you're not really looking to long, right, this whole time, because you can't reclaim the 20 line. And then also, okay, so there's another thing that I use that I've talked about on the stream before as well, which is like the alligator jaws on the RSI, right? So if you get a pump up and you're seeing the purple RSI pump way away from the Stokes, these generally snap back together, right? So when you see these kind of false pumps, you'll get like alligator jaws, you get your momentum clip, and they snap back together, right? You get your momentum clip and they snap back together. But that's something separate. But if the 80 and 20 makes sense, Throw a 1 in chat so I know you guys are following me here. Can you use some other indicator? No. I mean, it has to be Market Cipher. I'll tell you this. Who asked that? DM me on Discord, Hypertension. But no, generally it has to be Market Cipher or Market Cipher similar indicator. But just DM me on Discord. But yeah, and this is on like all time frames, right? So another example, so here's like the big short squeeze before the dump, right? So you break above the 80 line durably here, right? You start squeezing, you squeeze all the shorts, right? And then you break back below the 80 line with both here, and then you start selling off. So it's kind of the way you can determine a squeeze as well, right? Similar here, you lose the 20 line, right? You lose the 20 line here, right? You start squeezing longs, continue to squeeze, and then where do you reclaim out of the 20? You reclaim out of the 20 here, and you pump. It's a really simple Market Cipher strategy, and it's effective, right? So you can see it similarly over here. Right? You break above the 80 line, you start hugging the top, you start squeezing until you durably lose both, right? So the stock doesn't cross here, right? You durably lose both here, and then what do? You sell off. You guys starting to see a little bit of a pattern here? It's a really easy Market Cipher strategy. If you're looking for this, I should make a video on this. Really, I should. You guys are getting the sauce. But yeah, it's a really easy Market Cipher strategy. And then the gapped RSIs is also really good for telling if it's going to be like a fake move. Let's see what we can find here. And it works to the downside too, right? So you'll get these alligator jaws to the downside as well. Generally, those will snap back up to the upside, right? Snap back up to the upside. But yeah, you'll get like these alligator jaws on the RSI, and they generally snap back together. So whether it's up, right, whether it's down, snaps back up, or it's up, snaps back down. If you ask me the 2 best ways to use Market Cipher, that would be what I would tell you. Just over, 5 years of looking at the indicator, those are the 2 strategies that I like the most, and I don't really like indicators, so. Does that make sense, guys? No, I don't use Chart Prime. I don't have Chart Prime. It's like a really easy way on large time frames to see when you're like losing momentum, right? Like when these Stokes are no longer, right? Like claim the 80 line here, massive squeeze, break it durably for the first time here, but you break it here and you have alligator jaws, so you can kind of, I mean, this is kind of a combination of both strategies, right? You lose the 80 line, you get alligator jaws, you can assume there's going to be a snap back, but it's short-lived and you come back down, right? Because you lose the 80 line again here, right here, and you sell off. So it's like a really easy way on large time frames to gauge when the squeeze is going to be over. Like, just, I promise you, just go back and back test this. Throw them on your chart, and you'll kind of be amazed at that. Which, I mean, hey, as long as this doesn't alligator jaws out, right? You lose the 20 line here, and you're coming down, 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 and then you break out of the 20 line here. So could we have something brewing here? Maybe, but we'll have to wait and see. But this could be a setup to come higher. Man, y'all got me looking at Market Cipher again, Durably, and I'm remembering my strategies, man. I used this indicator for like 4 years, man. It works on every time frame, bro. You can find it on the 1 minute. Right? You break above the 80 line here, you're squeezing up, you durably lose it here, you correct down. Works on every time frame. Right? You break above the 80 line here, you squeeze until you, I mean, it's a little more reactive on the 1 minute, but like, right? You squeeze up and then you durably lose it and you come down. And then you stay underneath the 20. You're generally not looking for longs, right? So you can kind of look at it this way. If you're seeing like a short squeeze on the chart, you're generally not looking to fade the momentum until you get like the break of the 80 line. Similarly to the downside, you see long squeeze to the downside, you're generally trying to fade that until you get like a durable break of the 20 line, and then you can look for longs. But it's a good check to have on your chart, especially if you're like, if Market Cipher is your main bread and butter. Yeah, it's a tool in the toolbox, man, but especially on like larger time frames, like it's pretty reliable. Like obviously there's going to be some false signals here, like you lose the 80 line here and then you reclaim it, right? But if you got short here, you see it reclaim here, you just get out or flip back long, right? But when you get like these durable breaks of it, if you go back and look at it, it'll start to make sense. But basically, you're wrong if you reclaim, right? You're wrong if you reclaim. But it can give you a bias for sure. Yeah, exactly. What alarm just went off? Hype breaks 4-hour structure. Okay. So we might be gearing up for something on hype. But this is... oh, wait. That is external 4-hour structure. Nice. We might see hype get a little bit of a run. If we can close up here. We got to close. But we'll see. All right, awesome guys. Well, I don't really think we're gonna go over altcoins today. I think we did a lot of lessons here. Thanks for being here, guys. Well, I'll update you guys in the morning based on what I see. Nothing has really happened this entire stream. Let's look at that 1 minute break structure. Golden pocket comes down. So this is an example of that 2 candle rule I was talking about, right? So yes, you have like a green candle here, but you have a red candle, then another green candle, right? So normally we would look at this as like the 1 minute broke bearish and you'd be like seeing if it breaks back bullish. This is not a bullish break. This is a retest of supply to come back down. To break bullish, you would have to come above here. But yeah, this is why you got to look for those consecutive candles. All right, cool. So we did a little bit of a Market Cipher lesson today. Pretty cool. Appreciate you guys being here as well. If you're new here, make sure you subscribe. Make sure you ring the bell. We don't normally use indicators like that on the stream, but I'm happy to give my sauce to you guys when I can. As always, guys, my name is Wave Cipher. Much love. Trade safe. Wave Cipher out. I'll see you guys tomorrow. Have a great one.